Good evening. Welcome to the ShadowTrader video week before Sunday, September 20th, 2015. I'm going to get into a little bit of fib analysis here in a second. We just came off of an FOMC meeting announcement on Thursday of this past week. The first thing I want to mention is that I was extremely surprised by the reaction of the markets on the FOMC. I will be the first one. I never have any problem admitting when I'm wrong. And what I mean by wrong is that I thought that the reaction would be much larger. I did think there was a chance of a move to the upside, although I wasn't overly confident about that. Those of you that watch me on the Tasty Trade show, you know that I had a back spread on a call back spread here into the announcement because I did want to profit if the market rose to the upside. But I did think that the market had a chance, of kind of breaching these prior highs and sucking in a lot of shorts, and it was already there prior to the announcement. But what the announcement did, it was kind of just like a damp squib, as we like to say, where you just had a look above and fail, and then there was a little bit more volatility to the downside the next day on Friday. But as far as the actual day of the announcement, it wasn't that big. I thought it was going to be huge, like on that day. But regardless, where does that leave us now? So SPX daily, you can see that we breached the 50% fib right here and did what is known as a classic look above and fail. That's when you have a horizontal resistance point. It only works when you have like horizontal lines, because what you want to do is you want to bracket off like a balance area. And in any balance area, you can either look above and go, look above and fail, stay in balance, look below and go, or look below and fail. And when you look above and fail, what you want to do is you want to be targeting the other side of balance. So in this case, the market was in balance here, I believe. It looked out of balance and it failed back into balance. And what you do is you target the other side of balance. So the odds would favor that the market at this point would move at the very least to here. And this is, I'm pretty sure this is how I want to define the balance, right to here. You could say that it includes this here, but I don't think so really, because this is really part of the downdraft. This is when the market was really wild. You had the 101 point ES limit down move, and this is sort of the bounce out of that move. And then once you came up to here, close to the 50% retracement, this is really where you started to balance. So that's what I'm going to be thinking going forward, is that now the odds are tilting in the favor of going back to the other side of balance, which would put the markets about 50 handles lower. We did breach an uptrend line here, which is bearish. That's this one. That's the main one. That's really the most important one. You can see right here I've drawn in another one, but it's very, very short term. So I will be paying attention to this level around 1945-ish or so, whatever that, around somewhere in the mid-40s here. Yeah, about 1940 in that level. I will be paying attention to that in the coming week. But mainly I want to see if this breach holds, or if the market creeps back up or not, and then comes down, or maybe it's a false break of the trend line. We don't really know. We do have a weekly hammer, which in and of itself is a pretty bearish signal. And the reason I say that is because it is on the weekly chart. So I think that calls, for instance, that are sold above this level are probably safe coming to the next week. You should be thinking about that. Premium is still decent. The VIX moved up a bit on Friday to about 22.25, up about $1.14. So there is still some juice there. I like to sell against areas where I'm quite positive that the market is not going to go. This is a relatively strong signal, so keep it in mind. I think that this high is secure, at least for the moment, at least for the next couple of weeks. We'll see if the market does what I think and we start to move down below the trend line, then the selling could kind of feed on itself and you may have a retest of the low, and it'll remain secure a bit longer. The NDX and NASDAQ composite, I will mention, are not as bearish in that they rose up well above the, let me just see here, well above the, not only the 50% fib retracement, but well above the 61.8. I mean, you can see here the NASDAQ went, the NASDAQ 100 here actually went quite far. You can see here all the way like this, right to a downtrend line, right in here in the NASDAQ 100 before failing back. And it even is not trading anywhere near the 50% fib retracement. So why do I point this out? Just that this, out of sync action is happening. It's always like this. It's not anything new. It's certainly not anything groundbreaking. But just remember that as one index is driving in the direction that it wants to go, perhaps the benchmark, the S&P, the other ones sometimes get caught up in support and resistance that's at different areas. So that's something that I will be watching. Jumbotron stocks, which I trade often, I've been flipping through those, and it's really strange because if you look at the patterns, like let's just stay on the weeklies, they don't look bearish like the rest of the market, right? I mean, Amazon was bought up this week. Chipotle has a doji, right, as opposed to a big topping tail going sideways. Google, as we like to call it, again, a little bit of a topping tail, but still green body. Netflix, green body, right? Actually an engulfment of the prior week's action, right? That's interesting. You have actually this body larger than the prior week's body. So you actually opened below last week's close, traded up above it, right? I mean, for short-term signals, those are relatively bullish. Price line, again, topping tail, but green body. That one's a little bit bearish. That does look a little bit toppy. What else on that list? LinkedIn, extremely strong this week, right? Coming out off of a low swing low here and driving higher. And let's take a quick look at Apple, which is not really a Jumbotron anymore, but Apple had kind of a bearish week, but certainly not a bearish overall pattern. So just a gauge of kind of how things are of what I'm looking at. I think the S&Ps have propensity to move lower. Jumbotron stocks don't look as bearish. NASDAQ 100 certainly doesn't look as bearish. Quick look at market profile here. Let's move this up. Not too much to glean from it this week, but I do want to point out where these balance areas are. Definitely some excess on the high. This is on the Fed day, obviously on 9/17. Notice that you have some decent excess on the high. This is not excess at an all-time high, but you had excess. You had the taper. 92 contracts traded at the high. That usually tells you that that high is secure, at least in a short-term basis. In this case, it's probably secure a little bit longer because obviously you traded much, much lower. But on an intraday basis, when you see that it's kind of a signal. What you do is you look out for the taper of the volume. I've discussed this many times before. You look for the volume to get lower and lower, and then you look to see if there's a very small single-digit number, a double-digit number, excuse me. It could even be a single-digit number, but I don't think I've ever seen that. You get a very small number at the top indicating that that's pretty much the end. Nobody really trades at the tail ends of the distribution. So I'm pointing out there is some excess on the Thursday high. Friday was a gap down which held, so coming into this week we do want to keep track of this gap. If the gap doesn't fill at all this week, that's more bearish. If it fills somewhat, then it's not as bearish. To me, price shouldn't even go up there for a little while. It should leave that gap unfilled for a little while if things are going to stay bearish. Now, going forward with the profile, remember that we broke out of balance to the upside, and then we fell back down into range, right? We looked above and failed. So we do still want to keep in mind where like the more balanced areas in the profile are coming up. So you want to be watching like 1950 down to 1930. This is a balance area. Notice that Friday's low, where did it go? Right into here, right into the meat of it. And you can see there's all kinds of points of control right here, especially here, right? Point of control, fairest price to do business 2 days in a row, and where does the market reverse? It kind of comes here and price and rejects, from that area and bounced a little bit. So I'm going to be watching for that. These are areas that you may want to mark off in the coming week as that if price is able to move down through or retest this area. Just remember that since you have a lot of trade going off here, right, you can consider that overhead supply. All this would then be overhead supply coming online, so to speak, and it drives the market lower. So I'll be watching for that balance area, and then also there's this other balance area down in here that we want to be watching for as well, coming into this week, which would be a little bit lower. That would be like the 1930 to the 1905 level. As far as structure is concerned, I would say take note that here on the way up it was relatively poor. That already got repaired. Certainly on the Fed day it was poor, it was very stretched out. But on Friday it was actually decent. It kind of filled in all over the place, 5 to 6 TPOs wide. Did we get migration of the point of control? Not really. Point of control is still up here. The most amount of volume on Friday actually still traded here, around 42,000 contracts. It would be a little bit more bearish if that was further down volume-wise, but TPO-wise, in terms of the amount of time that was spent, that is actually lower, right? That's this area here. That's your TPO POC. All right, let's take a quick look at vol here. I had made some comments a little while ago that I said that I don't think that volatility is going to go back into these levels anytime soon. It seems that way. You can see here we've been coming down in a little bit of bounce on Friday. I think vol is going to remain at least slightly elevated in this area. It would be better if it was a little bit higher. Obviously, just be more to do on the options front if we could get it a little bit lower. But definitely VIX something you want to be watching for, especially if you trade S&P options. All right, that's all I have for this week. I'm going to leave it there. I'm going to leave you with one last takeaway, just as far as market is concerned. I'm going to focus this coming week on the fact that this high should remain secure. And when I say secure, you want to be watching it for a while, right? Like even if this coming week we go sideways and we don't take out the high of this topping until we go sideways again, you want to be watching for if it ever does later. That's still considered like a bullish signal. I don't know or think that's going to happen. I'm not sure. I'm just saying that you want to carry forward that tail longer than just 1 week. It would be like the same thing like I would continue to carry forward this tail, this tail down here, right? I would still be looking at this tail as support. I'm still looking at this tail as support. So that means that if the market does come down here, right, and then breaches it, okay, then I'm thinking, all right, that's pretty bearish. We're going through the next one, right? If at some point, for some reason, the market gains some strength this coming week, goes up and breaches this area, I'd be watching there. I would think we would at least move up to here to the top of resistance, right? But I'm just saying, it's just something that I'm carrying forward and watching. I'm also paying close attention this coming week to the Jumbotrons and how they're acting. I've been trading very, very lightly as of late. I'll be very honest with you. I haven't really done all that much in the market. I've been working on a core S&P position each month, but usually I do like tons of other stuff. But besides that, I haven't done that much. I mean, I've done a few trades on Twitter and handled the show a few Fridays in a row for Brad, and we had some good delta neutral trades just on, kind of Friday options expiry 1-day trades. But I haven't been very heavy, so I'm definitely looking to crank things back up. As you know, I've been working on the new ShadowTrader.net, which is almost ready. You guys can feel free to check it out. I'm not officially launching it with any big announcement because there's still a lot of things to clean up there, but some of you have emailed in and told me that you're enjoying the new website, so obviously feel free to surf around there. But I will be looking for more opportunities in the coming week and sharing those with you in the videos. But most of my time has been working on the website as of late. I got a lot of great content and new things coming down the pipe, especially with our colleague Ryan Mastro. Many of you have emailed in that you're enjoying his appearances on the Squawk Box Tuesdays and Thursdays. So we enjoy bringing that content to you, and a lot more to come from him. So anyway, I'll be focusing also, as I was saying, on that topping tail in the S&P, and focusing on these Jumbotrons, not only because of what I just said to be looking for trades, but just the fact that I'm still seeing a lot of relative strength in these names. Like LinkedIn is obviously the strongest example of them all. But I'm just going to be watching them closely to see how they're reacting in the current week. If the S&P is indeed bearish, remember the NDX is so much stronger, how these Jumbotrons are going to act. And if they do continue to constantly show this relative strength, then there's going to be some strong buy points coming up as the S&P eventually bottoms out at some point. So be watching for that. Beyond that, this is going to be, I believe, and this you can kind of take with a grain of salt, but it's how I believe that the market is going to play out. I think that the movement into, say, the end of October, for end of September, end of October, there's another Fed announcement coming at the end of October. It's like 2 days before the end of the month on the 29th. I think that the bias here is for the most part going to be sideways to down. Obviously, if the topping tail of the S&P is violated, then that would change. But to me, it does feel like it will be more of just sideways to down as opposed to hard up or hard down, etc. Meaning there's different ways it could happen. And the reason I say that is I think there's still a lot of push-pull out there in terms of larger funds and people on the street and thinking of will they raise rates in 2015 or not at all. I think there's still a lot of people in that camp that don't think anything's going to happen until 2016, and that very well may be. Certainly, numbers-wise, I don't really see how they make the case for doing it. There really is no major, inflation that they need to tamp down or anything. So it may not happen, and in that case, that may keep the markets buoyed. It might hold them up. I know the markets fell on Friday when they didn't raise, but that's also the markets were also up a bit. So, and again, and I do think the bias is somewhat down here, but I'm just, for what it's worth, my 2 cents is kind of sideways to down, and be looking to profit from that over the next few weeks into the end of October. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.